Calculating the costs of homeownership appears to be easy. If you can afford a mortgage, you can afford to own a home, right? Unfortunately, that's not always the case. There are costs of homeownership hidden from renters that can both lighten the wallet and break the bank. Calculating these costs is tougher than predicting your mortgage payments because they're variable by nature and given to change. So you may be wondering, Nicole, how much do these items cost? Well, it differs greatly by where you buy, how old your home is, the size of it, and more. But there are some universals that we can look at to help you best prepare. Your mortgage will include principal and interest payments. If you have a fixed rate mortgage, then these numbers will remain the same over the life of your loan. On top of this, your real estate taxes and insurance are also fairly fixed costs with owning a home. I say that taxes and insurance are fairly fixed because technically they can change. Taxes can, and over the time that you live in the home, most likely will go up. You can try to fight them, but usually you get stuck paying whatever they tell you. Home insurance can also change. Now, it won't change immediately, but each year your homeowner's insurance policy will be up for renewal. And if you see that the amount that you pay in homeowner's insurance is set to go up, just know that you can change policies at will anytime to get cheaper coverage. You don't even need to wait until your current policy is up before making that change. Utility payments are the last semi-fixed expense. When you own a home, you may have more utility costs than when you were just renting. It is common for utility and service companies to charge you a setup fee as well, in addition to the cost of your monthly services. So when you multiply that cost by the things that you must set up, the electricity, gas, cable, internet, trash service, water, sewage, it all adds up. It's easy to plan for things like closing costs, where you get a statement and it says this is the exact amount you need in the bank to close. But it is so important to cushion your bank account so that you're not strapped when things like utility activation fees start to add up. Let's say that each one of those companies charges you a one-time setup fee of $100. You could be on the hook for an additional $600 just to set up the utilities to get your home that you just bought functional right after closing. And this is something that I've seen buyers be kind of stressed about, that they didn't think about on the front end. Now, all of the costs that we have talked about so far have been fixed or relatively fixed. But there are several different expenses that you will be responsible for when you buy your home, in addition to those that we just mentioned, and these ones are different because they're variable. The home that you're trying to buy could be subject to something called special assessments or HOA fees. Now, assessments are fees that you as the homeowner pay for the upkeep of property that's held jointly with other owners in the neighborhood or community. So you'll definitely have these if you live in a condo or a townhouse, because it's through the payment of assessments that operators have the funding to replace roofs or maintain the community parking lot. Assessments may also be collected in certain neighborhoods by a homeowners association. It is common to see these in neighborhoods that have community amenities, like clubhouses, walking trails, a pool, or maybe the neighborhood is even gated. The amount that you pay in these fees will differ based on the amenities offered and your percentage of the total community. So you may notice that your HOA fees in a smaller house are less than the HOA fees that someone in the same community pays where their home is bigger, because it just is a percentage of the total community that you take up. Now, the big thing that I want you guys to realize when it comes to assessment and HOA fees is that these can lower the amount that you have available to spend when buying a house. Since these fees are required to live in certain communities, the lender must use them when calculating your debt-to-income ratio. So if your lender tells you that you can afford, let's say, $1,200 a month, just know that if your community has a $200 a month HOA fee, that would reduce the total amount that you have available to put towards a house to $1,000 a month. So just keep in mind, you have a little less purchasing power if you end up buying in a community with these types of fees. But usually they have those fees because they have certain amenities that are available to you. So you have to weigh the pros and cons yourself to see what might be the best for you and your family. When you buy a house, you no longer have a landlord to call or a maintenance team to file a ticket with if something goes wrong. Repairs and maintenance of your home can add up and be very costly. If you budget for these things before they're necessary, trust me, you will thank yourself later. Keep in mind that you don't just need to maintain the inside of your house, but also the outside. This could involve landscaping and grounds maintenance that may not be necessary all the time, but is something that you will be responsible for. When I was buying my first house, I was so excited to get a home with a fenced backyard for my dog. That was number one on my must-have list. But what I did not think about was that maintaining the yard was now my responsibility. For the first few weeks, my yard grew and grew and grew and turned into a weedy mess. I officially was the neighbor with the ugly yard that nobody wants to have. On top of my yard being overgrown, I also did not plan for the number of leaves that would fall each year and need to be picked up from having 8 giant trees in the backyard. All I focused on was the lovely shade that I would get and how fun it would be to hammock in them. So I tried tackling the yard once. I bought a wheelbarrow, rakes, weed whacker, leaf blower, and when I finished about a quarter of the yard, I was exhausted. It was in that moment that I realized I was now going to also have the extra cost of paying a lawn company every other week to come clean up my yard, because this was too much for me personally to take care of. And I know what you're thinking right now. You're sitting there going, Nicole, this is great and all, but I'm way smarter than you. I have all of this planned and budgeted for. And that's great. I hope you do. Homeownership is such a fun and exciting experience, but it can turn into an absolute headache if you are not prepared. And it is my hope that every homeowner is prepared, so owning a home is not stressful. I also want you to understand that you can never predict what potential hiccup you could run into while owning a home. Just 2 days ago, a slight thunderstorm knocked out the power to my house for a couple of minutes. And just the few minutes of no power was enough to blow the fuse on my garage door motor, something that I will now be responsible for fixing, but completely did not anticipate. To best prepare yourself for the true costs to own and maintain a home, keep a cushion of $2,000 to $5,000 as an emergency home maintenance fund in your bank account. You can also reduce your risk of unexpected costs down the road by getting a home inspection while you are under contract. A licensed home inspector will be able to give you a good idea of the overall condition of the home and the age of all the major systems. This can be beneficial because it will allow you to plan for when maybe the water heater goes out in the next few years. I know this was eye-opening to me when I bought my first house because I didn't have a disclosure that came with the roof age. I didn't know how to tell how old the HVAC system was. So having the inspector let me know that, the water heater was 8 years old and the typical life expectancy for a water heater is about 10 years gave me peace of mind because I knew that maybe I had a little bit left to go and I could plan for replacing that in the future. I have seen things wrong with even brand new construction homes. Builders are human too. Sometimes things get missed by their subcontractors. Last year, I helped a first-time homebuyer purchase a new construction home from a well-known builder. And during her home inspection, the inspector found out that the AC was completely wired wrong. And if left the way it was wired, it would burn through its life incredibly quickly. So my first-time homebuyer was exceptionally excited that we got this addressed and fixed before she even moved into the house. Now, this is not my intent, but if this video has scared you a little bit, Work to get yourself in a situation financially to where the unexpected costs of owning a home won't weigh you down. I promise you it will be worth it. And remember, I am here to help. Drop any questions you have in the comments below and let me know if you need help finding a great agent in your local area to assist you. If it wasn't evident by now, buying my first house completely changed my life. Check out this video over here for more on the lessons I personally learned when buying my first house prior to ever getting into real estate. I think you'll enjoy it. I'm Nicole Nark, Arkansas real estate broker with videos to help you find your way home. I will see you in the next one.